Good morning. It's Wednesday, the 13th of August, and this is Govindraj Ethiraj broadcasting and streaming weekdays from Mumbai, India's financial capital, our top stories and themes. The markets struggle to make up their mind, but what is driving their direction? Inflation is now 1.55%, and food inflation is now actually deflation. Decoding the 25% tariff impact on companies' earnings via CRISIL. How blockchain helps track down batteries for electric vehicles. And Bangalore and Chennai lead global airport rankings in on-time departures for July.
This is a core report with Govindraj Ethiraj.
The markets compute multiple inputs. So the stock markets could not make up their mind as they oscillated between different states of mind and sentiment, from some form of apprehension on what could happen when the United States President Donald Trump and President of Russia Vladimir Putin meet in Alaska later this week. And on the other hand, a 90-day truce on US-China, which obviously was good news, at least for now. Now, all of this cannot be easy to compute for investors sitting here, since the elements are too many, too complex, and quite far away. Nevertheless, the markets were clearly in the positive for parts of the day and then closed firmly in the negative. Inflation numbers, the lowest since 2017 or an 8-year low, came out after the market closed, but how that could help right now is not very clear, but more on that shortly. The Sensex and Nifty were lower today, pulled down by consumer goods, realty, and financial stocks. During the day, as we said, the benchmarks alternated between green, red, and finally red. The Sensex closed down 368 points to 80,235, and the Nifty 50 was down 97 points to 24,487. The broader indices were mixed. The Nifty mid-cap was down 0.2% lower. The small cap was down 0.04 higher. Elsewhere, in an illustration on how bullish markets are overall and seemingly not paying much heed to what's happening around us, Japan's Nikkei 225 hit a record high following that US-China trade truce, as is increasingly the case in recent months. The relief following the threats of, mostly tariffs, seems to provide a greater push to the markets upwards than the situation before the tariffs were announced. So the relief in some ways is of greater impact than the situation before the event actually happened. Now, stocks fell on Monday in Wall Street or on Wall Street as traders were getting ready for US inflation reports that are out later this week and largely ignored a positive development in the tariff saga, according to CNBC. The Dow Jones Industrial Average was down 200 points on Monday, and so were all the other major indices, including the S&P 500 and the NASDAQ. The US Consumer Price Index, which is to be released on Tuesday overnight, and the Producer Price Index, which is out on Thursday, will be important or critical in shaping the outlook for direction of interest rates, particularly for the Federal Reserve's September meeting, according to CNBC. Now, to what extent all these numbers will be believed by Wall Street is something we have to see, given that the US government just fired and replaced the head of the Bureau of Labor Statistics for putting out data points the government did not like. So it would seem logically that whatever set of numbers that now emerge would be numbers that the government would like, or is it not? Anyway, let's see. Back home, I reached out to Gaurang Shah, Senior Vice President of Geojit Financial Services, and I asked him how the market was decoding the current environment as it moved between apprehension and optimism, and perhaps a mix of all.
These are uncertain times. There are still a lot of clarity that we need to have with respect to eventually what is going to be the shape, size, terms of the trade agreement that would be entered into as and when it is entered into with United States by India. Large part of the negativity or what President Trump has to say, unfortunately, every morning he gets up and he says something and he tweets something new and he signs a new executive order. So I think markets have learned to live with this. But yes, I would use the term, though I don't like to use this term, Govind, cautious optimism. There are pockets that one can look at, minus the sectors which are directly affected with what is happening in the global arena. So you have a lot of domestic related themes, not saying that they will be completely insulated from the shocks. There will be some correction, but that correction would be limited in terms of correction vis-a-vis the sectors which are directly connected with the international news flow.
So let me ask you a question which sort of maybe if you can pull back or relate to history. When you have so many signals which are so different in origin and source and in impact, How does one compute when you're actively in a market like this or at a time like this?
Firstly, I think when we at our end don't have clarity, I think it becomes very difficult for us to meet up with clients and convince them in terms of what the investment philosophy should be. Having said that, I will just compare it with a very recent episode. It was nothing to do directly with what is happening right now with respect to tariff. Because this tariff thing, Govind, I think if you and me recollect, I think it has happened after a very, very long time. Okay, many years back, I think something like, I think it was the first and the second nuclear experiment that India did, and then there were a lot of sanctions, etc., etc. But I won't go deep into that. I think if you just touch upon 2020 COVID time, okay, though not connecting these two directly, Govind, but we recovered quite smartly, right? And COVID happened after 100 years. We had not seen, none of us who are right now witnessing COVID or Wuhan virus had experienced it before. So if we could come out of that kind of a situation unscratched and in a much more healthier, in a much more smarter, in a much more matured way, Govind, then I think this also will be a thing of the past. But Mr. Trump needs to stop the rhetoric. He needs to stop tweeting every morning. He needs to stop threatening countries, to be very honest. You can't be inviting some general in your homeland and he'll speak anything out of his hat and you don't have to say anything about it. So I think our government is matured enough, Prime Minister and his entire team. They're lying low. They've not said much. I think that's a matured way to go. And more importantly, Govind, just to answer your question, I think the recent AMFI data that came out, 42,400 crores, correct me if I'm wrong, in terms of equity flows, that speaks for itself. At ground level, Govind, when I interact with people, because we conduct a lot of investor awareness program, the maturity, Govind, has gone to a next level of a small retail investor. So that's something big that we can take home.
Right. And I was going to come to that. I mean, supply clearly, as per the latest AMFI data, is at record levels into mutual funds. Okay, maturity is one way of looking at it. The other is, of course, there are really no other options to invest. But either way, the flow is coming into the market. So to what extent is the flow itself creating the floor that is keeping the market so strong?
Again, reflecting back from 1st Jan till about, say, May end or June, FIs did what they did from last October 24 to December 31st December 24. We know the numbers. And from 1st Jan 2025 till about end of May or mid of June, that number was bigger than what they sold last year from October to December 31st, 24. So despite of that kind of a selling, we corrected, correct me if I'm wrong, I think on the index level, Sensex Nifty, about 17 or 18% from the all-time highs to the low of maybe somewhere close to about 21,800. And from the high of 26,277 on the Nifty spot. So this was supportive in terms of the liquidity power that the domestic institutional had. And that was all thanks to the retail investors. They didn't get scared like earlier times. They continued. They did not pull out, Govind, and they continued allocating a larger sum to the direct investment or via mutual fund SIPs or a lump sum investment. The only scare right now is people are wondering that if this is a prolonged standoff between India and US, then how does it shape? Because every time he comes and says, for example, today I heard he's extended 90-day window again with China on 25th or 27th August, whenever the date is. If he again says, no, I'm extending and we are trying to talk. So that uncertainty, Govind, is something that the market doesn't like. I would love to have certainty as far as this tariff-related policies are concerned from the US, especially from the President of the United States of America.
Right. And back in the domestic market, so what sectors are you liking right now? Or is there anything standing out for you, particularly at this point?
We have almost just seen curtains down for the first quarter of this new financial year, barring some few companies which may be out tomorrow, day after, and then it'll be the end of season for first quarter of this new financial year. If I have to take home some positives, though, I mean, there were not too much of excitement on the first quarter earnings, going to be very honest. But yeah, there were some green shoots that were visible. So, and all that was related to the domestic consumption, discretionary, non-discretionary. Coming back to FMCG, two parts, discretionary and non-discretionary, that did relatively well. Our sense at Geojit, Govind, is that from third quarter, October, November, December 25, I think the actual push to consumption will come in. We have tax benefit, zero tax to 12.7 lakhs. We have good monsoons. Semi-urban, rural India, demand will pick up once the crop is out in the market to get sold, and the direct cash transfer benefits enhances the spendable income of folks in the semi-urban rural India. Cement has done well. Cap goods engineering is doing well. Along with that, defense. And of course, Govind, banking and finance. I think these are some 5 or 6 sectors that excite me to a certain extent.
Right. Gaurang, always a pleasure speaking with you. Thank you so much for joining me.
Thank you, Govind. All the best. Thank you so much for having me.
Inflation hits a fresh low. India's retail inflation, measured by the Consumer Price Index, has fallen to 1.55% in July, falling from 2.1% in June, according to data released Tuesday evening. Now, this marks the 9th straight month of easing prices, and this also means that inflation is now well below the Reserve Bank of India's mandated 2 to 6% target range. It's also an 8-year low and the lowest reading since June 2017, according to the Ministry of Statistics and Program Implementation of the Government of India. The data suggested that food prices were down and core categories were largely stable. The decline was also driven by a favorable base effect and broad-based easing across categories like transport and communication, vegetables, education, eggs, cereals, sugar, and pulses. Food inflation is, however, actually deflation, because food inflation is now at minus 1.76% for July, that is, from minus 1.01% a month earlier. So it's been on the negative for 2 months now and still falling. Now, this is the steepest fall since January 2019, with rural and urban food inflation at minus 1.7 and minus 1.9% respectively. Elsewhere, net direct tax collections have fallen about 3.9 or close to 4% to 6.6 trillion rupees so far this fiscal, thanks mostly to higher refunds, according to government data once again released on Tuesday. Direct taxes includes taxes on income paid by companies, individuals like you and me, and by professionals and other entities. Net corporate tax collections stood at about 2.3 trillion rupees, while non-corporate tax, which includes individuals, Hindu undivided families, and firms, was at about 4 trillion rupees. Speaking of taxes, the Finance Ministry on Tuesday notified a corrigendum to the income tax bill on account of interest to be charged on short payment of advance tax by a taxpayer. The corrigendum, which provides for a 3% interest on short payment of advance tax, aligns the clause with existing provisions in the Income Tax Act 1961. We, of course, now have an Income Tax Act 2025. Taxpayers having a tax liability of 10,000 rupees or more have to pay advance taxes in 4 installments: June 15, September 15, December 15, and March 15. So the point about this is also to, of course, tell you that you have to pay advance tax and you have no choice in the matter. So taxes cannot be just paid at the end of the year, but have to be paid consistently through the year in anticipation of what you think you'll earn or an additional income that you might be receiving. So that's the important point here. And here's a message from a sponsor. Want smarter investing at your fingertips? With InvestingPro, get real-time market data, custom alerts, and global financial insights all in one place. Join 46 million users already making sharper decisions. Download InvestingPro today. More details in the link below. Decoding the 25% impact. So here's a slightly detailed breakdown. The imposition of the 25% tariff on import of goods from India into the United States will have a significant impact on the earnings of companies in sectors like diamond polishing, shrimps, home textiles, and carpets, according to a report from rating agency CRISIL. The additional 25%, if it comes into effect from August 27th, as penalty for importing crude oil, will make India's exports to the US unviable for other sectors as well, like ready-made garments, chemicals, agrochemicals, capital goods, and solar panel manufacturing. The extent of impact will vary depending on exposure, ability to pass on incremental costs to customers, and relative tariff disadvantage versus competing nations, says that report. A potential second-order impact, including a slowdown in US demand and disparate tariffs across nations that could alter trade dynamics globally, is also something that has to be watched closely. On the other hand, CRISIL says that some balance sheets are strong. Potential bilateral trade agreements with other countries, and the possibility of support from the Indian government, which has already been indicated and hinted at, should help mitigate some of that impact. To pick up a few specific sectors, for diamond polishers, US exports are about 25% of total revenue last fiscal, and the tariffs will obviously put much pressure on the already modest operating margins of the sector due to reduced fixed cost coverage and the onus on bearing the higher tariff cost, as retailers in the US have shown limited inclination to take on the burden, says that report, which will further put pressure on working capital cycles, which will elongate as inventory moves slowly and customers stretch payment cycles. This, of course, could apply to many more industries. For shrimps, we've been talking to the All India Seafood Exporters Association. The US accounts for 48% of revenue, and with applicable reciprocal tariffs, countervailing duty, and anti-dumping duties in place already, India is one of the highest taxed major shrimp exporters to the US. Home textiles and carpets are both significant export-oriented sectors, with exports accounting for 70 to 75% and 65 to 70% of total sales. US accounts for 60% of exports of home textiles and 50% of exports for carpets. So very broadly, while there is some tariff advantage currently in contrast to China, which is the next largest exporter to the US, the reciprocal tariffs will lead to a material decline in revenue and profits for both these sectors, given the limited ability to pass on the higher cost, thanks to the discretionary nature of these products, says that CRISIL report. Now, other sectors like ready-made garments, agrochemicals, specialty chemicals, capital goods, the impact of the 25% reciprocal tariff is likely to be more manageable, considering moderate exposure to the US, that's 55 to 20% of overall revenue, and limited tariff disadvantage that could allow companies to partly pass on the impact to customers. Now, just to remind you, sectors like pharmaceuticals and smartphones have carved out, or rather have opt-outs right now. They're not exposed to any tariffs, or rather they are exempt from tariffs. But looking at it from here, we really don't know when the swinging axe will fall next and on whom. Tariffs for other sectors like steel, aluminum, and certain automotive components remain unchanged. Of course, the imposition of tariffs on multiple countries does pose a risk that competing nations will redirect their sales to other countries, including India, and that we're already seeing early reports of, which could obviously impact the earnings of domestic companies in sectors like steel, chemicals, and agrochemicals until global demand and supply rebalance, says that CRISIL report. Building on blockchain. Welcome to Build on Blockchain, supported by Algorand, where we are joined today by Abhijit Pegu, co-founder of LW3. Abhijit has a background that spans technology. He's also worked in the mining industry and problem solving across industries. He saw firsthand the challenge of traceability and applied it to batteries in electric vehicles, which obviously will be changed, interchanged, and exchanged. Pegu is also working on a mission to create digital product passports, giving every product a verifiable identity and thus hoping to restore customer trust, protecting, of course, brand revenues and also trying to create new benchmarks for authenticity and sustainability. I reached out to him and I began by asking him what made him focus on traceability as a problem or a business problem to solve. Abhijit, thank you so much for joining me today. Tell us about where is the problem in the supply chain and how does your solution address that?
Fundamentally, if you see, a lithium atom is indestructible. So what that means is, going to basic first principles thinking. So what that means is you can use the lithium atom infinite number of times, right? So that's where the interesting thing happens, that once we recycle lithium, the recycled lithium and virgin lithium are both same. But then again, there is the global scenario where there are some realistic things happening, like the amount of virgin lithium is limited. And it's understood now that the producers of lithium will not be able to keep up with the demand, including nickel, cobalt, and other critical minerals for the coming decade or so. So that has led to the thought of circularity, using the lithium again and again. And for that, we need to recycle the end-of-life batteries and bring it back, give it a second life, or, if possible, put the recycled lithium or nickel or cobalt into a new battery. But then the catch is, how do we keep a track of all these batteries which are circulating in huge numbers, which are repurposed, replaced, refurbished, and recycled? And now, on the other hand, blockchain technology brings two things, primarily very different, very fundamental, and unique from Web 2 technologies. And that is, one, proof of ownership. Every Bitcoin that has been, in the market since 2009, you can track it actually. And second, store of value, digital store of value. Like, for example, Bitcoin now is almost like more than $100,000. So these two features, when we think about fundamentally and attach to a valuable component like electric battery, which is the most valuable component in a vehicle or in an electric vehicle, right? That costs close to 30 to 40% of the vehicle itself, because it doesn't have an engine. It has just the battery, which gives all the juice, and it has lesser moving parts. So the idea is to start tracking the batteries and then create a wedge and then start tracking the other parts that goes into the vehicle, like the electronic systems, the gearboxes, the powertrain, so that we can achieve net zero goals by 2050 under the Paris climate and contribute to a circular economy. Like today, it's quite linear actually.
Right. Abhijit, when you started this company, you said that, you came from a mining background, that you worked in consulting, and you felt that this was a problem to be solved, and which you're now obviously addressing in a concrete way with a product and so on. Is there any other allied problem that you feel you've discovered in doing so? Which again, there are two parts to this. One is it could be unique to India, and second, of course, it could be a global kind of challenge.
Yeah, we started with traceability, to be honest. And traceability means like provenance and tracking any product from its upstream, midstream, downstream of its value chain. But in that journey, because we had to explore blockchain, so what we discovered is the supply chain itself has not been reinvented or has not been updated with technology. So what we have discovered that financial engineering can be incorporated or integrated with supply chain through the use of blockchain. I think there are a lot of articles on this, and it can really bring a supply chain 2.0 revolution where the supply chain is smart. The supply chain is financially smart.
Right. It's been lovely talking to you, Abhijit, and wish you all the best for your venture, and look forward to seeing you soon.
Thank you so much for having me here. Thank you so much.
The best on-time performances. Bangalore and Chennai have topped the large airport ranking in the world for best on-time performance, with about 92 and 87% approximately each, according to Cirium data. Large airports are between 25 to 40 million passengers per year, and the measure is of actual gate departure, says Cirium. And in airlines, Indigo had the best on-time performance in July in Asia with 87%. That's measured over 62,000 flights, and ahead of Thai Air Asia and Philippine Airlines. Even Singapore Airlines is not in the top 3. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.